I want to start with what I called earlier our loser du jour, which is Mattel. Sorry, Barbie.
Yep.
But this stock is now down 29% pre-market. Its price target was lowered over at Jefferies this morning, down to $19 from $25 a share. So the holiday period, the bread and butter, right, for these companies was disappointing for Mattel. A lot of retailers also offered big promotions. That squeezed margins. But I think what really is getting investors down is its full year guidance. It is considerably lower than expected.
Right.
And remember, we had Hasbro a few days ago. Much different story.
Yes.
Much better than expected.
Right.
Actually, better than expected results for the holiday.
They've got the digital games there, Hasbro. I think they have a bigger percentage of that digital games. That's what I learned yesterday. We spoke to the toy analyst from BI.
Good morning. They're moving from Rhode Island. They're moving from Rhode Island up to Boston, I think.
Okay.
Yeah, they want to get closer to Durgan Parks. The problem here, Alexis, you don't remember this because I grew up in a Barbie-thon with my kids, particularly the middle child. And what's important here is Barbie on the Go sled toboggan was a must-have in the house.
Okay.
And that's a precursor for Barbie luge. So maybe they'll bounce back after the Olympics.
She's in the Olympics. I didn't realize. But yeah, I used to step on Barbie heads and arms and what have you in my house, and apparently sales are slumping.
In Mattapoisett, Massachusetts, there's a drive-by. It's a house where the entire front lawn is Barbie.
No.
All year. With snow's piled up, they don't care.
Mattel loves them.
That's very good.
Maybe they'll send them some free Barbies.
What do we got next?
All right, Lyft.
Oh, yes.
Oh, my gosh. Down 16% right now. Disappointing forecast, a surprise revenue miss. It's still going to buy back, though, $1 billion of its own stock. So confidence, I guess, in the company there. But it's got this global expansion, new product offerings. We saw the same thing over at Uber. When they're moving away from their core business, it seems that investors don't love it. And so they're punishing the stock as a result.
This is a case study for me. Uber and Lyft IPO about the same time. At that time, they were kind of the same companies. Boy, how those paths have diverged since the IPO. Lyft is 6, 7, 8, 9 billion, and the 100+ billion market cap.
Yeah,
for
the
Uber.
revenue.
Unbelievable.
The revenue's 8 times.
I don't know
Uber
what
is
happened.
50-ish gazillion, and Lyft is 6 gazillion.
Yeah, it's just crazy.
I mean, it's like
Talk about
it's
a diversion there.
Yeah,
All right.
we'll have to see. Do you have one more for us?
I do. We got to talk Kraft Heinz, right?
Yeah.
Down nearly 8% right now. That's on top of its one-year return of minus 16%. So it's going to pause that proposed split into 2 separate companies. Remember, it wanted to take like its grocery store staples business, Oscar Mayer Meats, Lunchables. It wanted to cut that off from its faster-growing sauces and seasonings business. Warren Buffett didn't like that. He actually called the breakup disappointing. Remember, he's the one who brought the two together in 2015. So Kraft Heinz has a new CEO. He says he sees opportunities ahead. That's CEO speak for Kraft Heinz, where he wants to keep them together until he can make them strong enough to separate. So he's going to invest $600 million to turn the group around. Of course, this is the company behind Heinz ketchup and Philadelphia cream cheese. So we'll see if it works. But there's an analyst over at TD Cowen, Robert Moskow. He says this indicates the business not strong enough to operate on a standalone basis. So we'll have to see when investors get on board with this plan to split into 2.